All right, guys, back to work tonight. Time to get ready for tomorrow. It's Wednesday evening after all. It is November the 9th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. If you're tuning in for the first time tonight, if you're watching for the first time, it's great to have you with me because my job tonight is to help us find the best trade setups for tomorrow. That's Tuesday's trading session. I got a jam-packed video in store for you tonight. Charts are all prepped up in the background, as you can see. Got the E-minis, got the oil, and we got our gold on the radar for tomorrow. Boy, where do we start here? Kicking off the second week, got a bunch of big news, got a bunch of big moves on the charts, and a bunch of great setups we're tracking for tomorrow. I'm going to break this down into all kinds of small pieces for us so you're ready for tomorrow. Before we jump in, though, I just want to make sure to remind you, if you've done so already, make sure you subscribe to our YouTube channel. That way you never miss all the good stuff we publish every evening on this video. Don't forget, if you have any questions, drop those questions in the comment section below. I'll get them answered as soon as we finish up here this evening. And as always, if you tune in every evening, if you're like me and you rely on this video to get your mind right and get those charts right for tomorrow, if you enjoy the video as much as I enjoy making it for you guys every night, really appreciate you guys supporting this channel by hitting that subscribe button and that thumbs up button for me here on the video tonight. So make sure you subscribe, hit that thumbs up if you guys enjoy the video, and drop those questions in the comment section below. But enough of the introduction. Time is ticking. Let's get this video going here. Look at the charts here for tonight into tomorrow, Tuesday's trading session. Boy, oh boy, where do I begin here tonight? Gold, an absolute bloodbath on the gold today. It took them a week to climb it higher in about 4.5 hours this morning to set it right back down to major lows. We are sitting on significant lows right now on the gold chart. It's a very strong spike for the bears on the gold. And whenever I see these strong spikes, I always expect to look for one of four possible chart patterns or four possible setups for tomorrow. So I'm going to break down each of those four scenarios. That way you're ready for battle tomorrow on the yellow metal. Over on the oil and the S&P are a pair of reversals. Of course, oil had that big pop up, right? Now we are reversing back down here. I'm looking to get short off the top of these channels right now. We have 1, 2, 3 reversal patterns here on the gold, 1, 2, 3 rolling over. I want to get short here on the way back down to some major lows for tomorrow. I'll talk about the best way to get short here on the crude, and there's still a chance the buyers may hold on to this for tomorrow. We'll talk about how to get long in this market if you want to be a buyer on the oil. So we'll talk more about that as we get deeper into the video tonight. And of course, the S&P, boy, S&P, same thing as oil. S&P goes up and then rolls over here with a nice 1, 2, 3 reversal pattern. I've got my eyes on some great spots up there at 35.80, and we got that weekend gap. We talked about this morning in the trade room. 35.10, right? 3,500 is a big magnet tomorrow for those sellers. What if we keep grinding lower? What if we pop? I'm going to talk about all the possible scenarios and my favorite way to trade them in tonight's video. Before we jump in, though, and get the charts going here tonight, though, let's make sure we grab a look at the calendar for this week. It is the second week of the month of November, right? Or as we might all feel like, it's kind of the end of the day on Tuesday that never ended last week, right? It still kind of feels like I saw someone post a meme today for Groundhog Day, right? Good morning, it's still election day here. It kind of feels like it all blurs together right now. But just in case you're not paying attention out there, it is the second week of the month. Remember, the second week of the month is usually going to be one of the least news events of the month. I shouldn't say the most active. I shouldn't say the sleepiest, the slowest, because that's not the case. But usually the second week of the month, you know, it's not usually the week where you get a lot of news events. So you can see there's not a lot on the schedule here for this week. Now, the big news here this week, of course, as we look, again, there's not that much here. Tomorrow we get the JOLTS report at 10 o'clock. That's the big news of the morning tomorrow. Wednesday, don't forget Wednesday, we're celebrating Veterans Day, right? So Wednesday is Veterans Day. Markets will be technically open, But you know my rule of thumb, right? If the banks are closed, if the schools are closed, if there's a parade going down Main Street, right, that usually means there's going to be a lot less volume, and less volume means less reliable setups. Now, there usually are a couple patterns to trade off of on Wednesday morning, but that window is really, really small. So you want to be very careful choosing your entries and exits closely on Wednesday. We'll talk more about that, of course, as we go. Thursday's a big day, right? Thursday is the big day. We get CPI and jobs. We get the inventory report. We got Powell there at 9:30, but that shouldn't be that big of a distraction. And of course, Friday, the PPI number on Friday. So you can see a lot of the big news this week is going to be after the holiday on Wednesday. So be aware of that. Not the busiest of news weeks this week. But as you can see, though, we're already getting off to a busy start here. Today, we heard that COVID vaccine from Pfizer, right, in the pre-market this morning. We've got a little bit more, right, a little bit more potentially coming in regarding the election from last week. Again, I know that the media has declared the winner for Joe Biden, but it does seem to be there appears to be some contention here. The sitting President Trump, of course, not conceding, right, that loss yet. So everyone's kind of waiting to see what's going to come about. I would hope it comes this week. Hopefully not going to push this right into the third or fourth week of the month there. Hopefully we'll hear some more updates regarding this election. You know, again, the news media has made it pretty clear who they think has won. We haven't heard. In fact, we heard from the GSA, the kind of agency that oversees the election. We just heard from them a few hours ago, and they said they're not ready to call anything yet. So we'll see how the next couple days go. That, of course, is the biggest variable, right, for this week, right? That's the biggest variable. The election still lingering out there. Second week of the month. Not a lot of news, but again, big news for tomorrow. Right, 10 o'clock Eastern time, holiday on Wednesday. Remember, holiday on Wednesday. Thursday and Friday are big days, though, right, this week. So we're looking forward to more news as we come into Thursday and Friday. So tomorrow morning, Jolts Report, 10 o'clock Eastern time. Now, don't let that stop you from getting to your desk early tomorrow. The best setups are coming early in the session right now. And don't forget, speaking of early, we open up our trade room every morning at 8 o'clock Eastern time. I'd love to have you there right there with me. I'll put all the important membership information, all the links you guys need to get registered and join me every morning in our trade room. I'll put that link for you guys, the description of this YouTube video. We open up every morning, Monday through Friday, 8 o'clock Eastern time, right? So grab that link, get registered, and don't miss tomorrow morning's trading session. Jolt Report at 10 o'clock Eastern time. We'll talk about how to trade the holiday session in tomorrow night's newsletter, right? So we'll come back and talk more of that here in tomorrow night's video. Over to the charts here, though, as we go. Let's get some charts going here. Now, we got the S&P, we got the crude, and we got the gold. The S&P and crude oil are very similar, and gold, well, we'll definitely have to unpack the gold here for tomorrow. Let's jump first into the E-mini, right? The E-mini, what's the key takeaway right now? Boy, what a wild start and a wild finish to this S&P. The key takeaway, of course, is that vaccine headline in the pre-market. Kind of funny how the market jumped before we ever got that vaccine headline. That kind of makes me wonder who knew about that coming out, and kind of convenient how it's the Monday after the election week. Maybe that's just in my head though, right? But it just when I saw it this morning, I was like, what is going on here? But anyways, I'll keep my opinions out of it, right? We have a big, strong push higher, right, on the from what sounds like a very promising COVID vaccine, 90% success rate among non-COVID patients, things like that, right? So that we assume, maybe I'm sure a little bit of, sigh of relief. The world didn't come to an end like the news media wanted us to think, right, after the election. So I'm sure there was a bit of a sigh of relief, right, in kind of a rally because of that. But we assume this is all based on that vaccine headline. Now, of course, we see, though, those buyers couldn't hold it, right? And the market basically rolls over now into what I call a 1-2-3 reversal pattern. Now, there's a micro version of this. There's a 1-2-3 here. There's also a 1-2-3 here. I'm going to focus on the larger one right now. This 1-2-3 pattern, right? Strong move down, pull back, bears hold, and they keep running. If you follow my newsletter, you know this pattern pretty darn well, right? 1-2-3 reversal off the high. What else do we know right now? We know that gap, right, becomes the magnet. So once those bears take control, the vaccine news pushes the price higher, right? Market rolls over. We had of course, a weekend gap. What is a weekend gap? Weekend gaps are the gaps between Friday's close, which is where we are right now, right? That is, of course, that is Friday's closing price, right, at 35.10. Of course, Sunday's open, right? So the difference between Friday's close and Sunday's open, we call those weekend gaps, or at least I call them weekend gaps, and they become a big magnet for tomorrow. And don't forget, we're going to leave that number, that 35.10 number. I'm going to leave that there all week this week. Right. And, statistically shows, or from what I've seen in my kind of watching these over the years, is we usually get these gaps filled before Wednesday's close. So if they close tomorrow, that'll be kind of right on par for what you'd expect out of a weekend gap. Again, weekend gaps are a gap up on Monday or a gap down, right, from Sunday evening's open to last Friday's close. Usually those gaps are closed no later than Wednesday at the closing bell. Looks likely they're going to close that gap for tomorrow, but nothing is certain here, of course, in the financial markets. What else do we know right now? We also know there was a bit of a range on here. In fact, it was a pretty long time it spent in that range. Why is a range important? A range is a magnet, right? Ranges are balanced areas. Ranges are magnets that will drag the price back up into that trading range. So really, again, some key takeaways here, right? A strong bull move higher. The buyers were unable to hold it. They roll over now and give the bears the momentum. I'd like to be a seller at resistance in a bear market. And where do we think these bears trying to go? They're probably trying to get down to fill that weekend gap. And if they really get advantageous, down to those big lows at 34, 56 and change down there, right? There's that big range you can see from last week's kind of election, right? Kind of post-election run up there. That range, right? Because ranges are magnets at 3,500 should be a pretty easy target here for those sellers. So we know we're bearish. That is the easy part. We also know we want to sell at resistance, right? That is a relatively easy part here as well. So as I zoom in on this chart right now, again, you can see the weekend gap, right, just above us. Remember, I'm drawing this channel off of this 1, 2, 3 reversal, right? The 1, the 2, and the 3 reversal pattern, right? That 1, 2, 3 reversal is really all you need to mark up that low, to mark up that high, and that really is where I want to get short. That will be my dream come true there, up around the high of that channel. You'll notice also that prior all-time high marked up there at 76 and a quarter. Those will be psychological levels for those bears here tomorrow. So range acts as a magnet. Overhead resistance is above. I'd like to see us get up and come right back down to retest that low and get that weekend gap filled as well tomorrow. Now, I also want to be ready for if the market keeps on grinding lower, because after all, we might just kind of collapse back down to that weekend gap. So I do want to be ready for kind of all of those scenarios here for tomorrow. My ideal setup right now would be, I'd like to see us pull back off this low, get up into these overhead resistance areas, and hopefully get some buyers caught, right? Hopefully get some buyers try to buy that pullback, go back into that range, right? Once those buyers commit and we're around the top of that channel, that tells me exactly where stop losses are, right? And I can use those stops as fuel to sell as this market goes lower, using what I call basically a buyer failure pattern, right? Get up above the moving average, get up into resistance, get those buyers to try to buy the pullback, right? Not a very good spot to be buying. I can sell into stop losses. I can sell the pullback right on the way back lower. There's really a couple different entry patterns I can use. I always like to look for, in a bear market, off the top of a bear channel like this, a buyer failure pattern into a bear pullback pattern, right, as we go lower. Now, every once in a while, and we'll talk more about this on gold, but every once in a while, you'll see what we call a two-legged pullback. We saw a couple of those today. Market pulls back. We do want to draw that trend line We'll draw a trend line off of that low, and we'll use that trend line as a level of resistance as well. That's another kind of little pattern I'm looking for here as well. Those aren't as common, but we did see a couple of them today, right? One on the oil, one on the S&P. So I do want to make sure you're aware of those tomorrow if we do get up into this area. If there is a two-legged move like that, good idea to draw that trend line and use that trend line as resistance on the other side. So again, buyer failure pattern, right? Buyer failure into a bear pullback, or if it stair steps going higher, right, we'll grab that two-legged pullback underneath that trend line. Again, focusing on selling up at key areas of resistance. Now, don't forget, guys, those two-legged pullbacks, those buyer failure patterns, I cover all of those in my free trading course. What I'll do is I'll put a link for you in the upper right-hand corner. Not to worry, pause the video, grab that link, join our free trading course. That way, when I say two-legged pullback, you'll know what I'm talking about. I'm going to send you hundreds of examples of how we apply all these patterns to our favorite futures markets. So grab the free course, learn the strategy, learn the setups I'm talking about, right? Because, right now, I'm just simply drawing on the screen right now. You'll learn that you'll get a much deeper dive into all those patterns with our free trading class linked up there in the upper right hand corner. And again, I'll put all the important links you guys need down in the description of this YouTube video, right? So if you need those, you can grab them there as well. Now, what if the market runs lower here, right? What if we run lower? If we run lower, what's our big concern? I don't want to sell too low. Right? That's our concern. As we try to run lower, I don't want to sell too low down here. There's one pattern I like to use when I'm worried about selling low. If the market keeps on running lower, you got to start looking for traps. We know where the bears are trying to go. Right? We know where the bears want to go. They want to get down to fill the weekend gap. They want to get down to this 3,500 area. I just don't want to chase it going lower. So what I'll do is I'll look for traps above prior swings. So if we don't get that pullback, that's fine. We don't need the pullback. But if it runs lower, now I've got to go in protection mode now. I don't want to sell too low. And my favorite way to do that is off a trap. Now what you want to look for is you want to look for a chance to sell short above a prior swing. But more importantly, try to combine that with, right, maybe the high of a new channel, right? There's some level of resistance overhead, right? Whether it be a trend line. I like to use these hidden channels drawn off the lows there. But that's going to be my go-to pattern, my go-to entry setup if the market runs lower. I'm going to use what we call a bull trap, right? Or a trap setup. And again, traps, just so you know, traps are always my favorite entry patterns whenever I'm worried about selling too low, like in this example, or buying too high, right? If the buyers had control. Now, couple more things to be ready for tomorrow. A very big move down, and you notice, right? You notice we're measured moving, right? We get a symmetrical move down. Those are big legs. So there's no guarantee this market keeps on going lower tomorrow. It may go sideways here in the short term. And if it goes sideways here in the short term, how do we trade that? There are really three patterns to look for if it goes sideways. The first one, and the one I always look for the most, is a buyer failure. Wait for the pop above the range, wait for buyers to come in, try to get long, and just simply hit them where it hurts, right? Sell into their stop losses. You can see a great example of that right here, right? There's your trading range. Look left there, right? There's your trading range right there. We pop up. Buyers try to get long and see ya, right back down again. That's the exact same type of pattern I'll be looking for if we get this market going sideways, right? Now, also, too, if the market runs sideways here, right, if it runs sideways for a while, how do I trade it as it goes lower? Is there any option for a breakout? Can I take a breakout down there? I would not look for the breakout. I would look for either a two-try breakout, strong move down, shallow pullback, lower low in price, and a trap high, right? Remember, traps are your best friend as the market goes lower. So if it goes sideways, then runs lower, right? That does not give us the green light to just get short, right? Again, remember the key is I want to avoid selling low, so I'll sell that trap high above that high here. Another possible scenario here, if we go back here a little bit, if we do go, again, this is assuming, again, we go sideways here. If we do go sideways here for a while, you may also get that strong move down, that pull back to the moving average, that jump off the moving average, that will be what? That's a 1, 2, 3 breakout pattern. I can mark up that low, I can mark up that high, and I can sell short off the high of that new hidden channel. Those are 2 breakout patterns, right? One is called a 2-try trap, which I think will probably be the most suitable for this environment because, again, we're worried about selling really low here, right? But again, both of those patterns will be quite effective if we can get this market continuing to the downside. So I think we have our bases covered pretty well here for those bears going forward. So how about the buy side? Can we buy this market? Oh, we definitely can, right? If we saw one thing today, that is the strength of these buy the dip buyers. You can definitely tell there is an attitude of just lay it all out, right? There's clearly a lot of aggressive traders in the markets these days. I'm sure a lot of that has to do with most of us working from home right now and dabbling right in the stock market. I'm sure a lot of that has to do with this. These are the personalities we've seen over the past few months here. Now, how do we buy this market? You know, let's say some news comes out, right? There's more vaccine and boom, right? We're going higher again. How do we buy it? Remember, there's one key reversal pattern I always want you to look for, right? I always look for it. It's called a 1, 2, 3 reversal. It starts off with that strong move up. It pulls back to the moving average, and it jumps off the moving average. The key is not the strength of the first leg. The key is the strength of the second leg. That's that, or the third leg, right, of this 1, 2, 3 reversal, right? The key is not the strength of the first pop. Again, they can pop higher all they want, for example, back up here. But they have to hold that pullback and jump. If they can't, we're going to roll right over and go back down again. That's why I said earlier, if we can get up here, I'll look for buyers to try and fail, and we'll just sell right back down again. But if those buyers, if they really have it, they're going to be able to hold that pullback. And if they can hold that pullback, now it's on. Now we can mark up that high, we can mark up that low, and now I do want to get aggressive with the right entry pattern, right? Usually these are going to be seller failure into pullback combinations, right? That's usually what we're going to see around that low. So if you were to kind of zoom in on that area, it'd be on a faster time frame, a bear failure into a bullish pullback combination. So I'm not trying to pick a bottom on this. Definitely not in the mood to pick a bottom on a strong bear move like we saw this afternoon, but I would be more than happy to be a buyer if they can show us enough proof. But again, right, a pop higher is not enough. We have to get that 1, 2, 3 reversal. And then as you can imagine from there, if these buyers can dig their heels in here and get control of this, the range is a magnet. But the buyers, they want one thing, right? They want to go back to retest those highs here at 36.68 for tomorrow. It's a tall drink of water to handle, right? That's a big bite to chew on for the buyers. But hey, you know, we've definitely seen the potential for this market to snap higher on anything that could be construed as good news right now. So we'll definitely be keeping an eye on the reversal. So get my plan of attack ready to go here, right? We know we're looking for the sell side up at resistance. If the market runs lower, though, again, be careful as the market runs lower. Look out for those traps. Now that we know the basic plan on the S&P, let's go over now to the oil. Oil could be just getting this party started. Now, what's the biggest takeaway right now on the oil? Again, I think oil benefited greatly from that vaccine announcement, right? Remember, oil, the price of oil has been depressed over the past few months, really ever since the pandemic and the lockdown started, because nobody's traveling. There's no demand for, traveling in a car or airplanes. Well, there's a little bit of demand. It's picking up, but that was the biggest reason why oil had really just been difficult to get it going up. Well, that, of course, came to an end here this morning. You can imagine why a COVID vaccine is so good for the price of oil. It's not good for the price of oil. It's good for the demand of oil, right? And the demand of oil leads to the increase in price of oil. So we assume, again, maybe it's a little bit of a sigh of relief after the election, right, went somewhat, it wasn't the end of the world. I think that's a win for everybody, right? So I think that's going to a sigh of relief here. More importantly, though, that COVID vaccine. Got that big run up. What I found very interesting here on the oil is that leg here matches that leg pretty much to the tick, right? The buyers get a 1, 2, 3 move up. I wonder if you can draw that. I wonder. Yeah, and buy the low of that channel. Boy, I wish someone would talk about that pattern more often, right? We talk about that quite a bit on this nightly newsletter. They get their measured move, and now you can see, right, it rolls over now. Now, I will definitely admit, I would like to see it go a little bit further down the line here. That would really make me happy. You can see we're sitting right around that big round number. But, to make a long story short, strong move up. The buyers tried once to retest the high. If we can get them trying a second time to retest the high and they fail, this is a great example of what I call the 2-try rule in our trade room and our video classes here at School of Trade, right? Buyers trying once, buyers trying twice. They've got one more shot, right? Think if they've got the gun with one more bullet left, right, in the clip, and they better make it count, because if they can't, this thing likely now, as the buyers try once, buyers try twice, if they can't keep this thing going, this thing is likely going to roll over on itself. And as you can imagine, right, there's no weekend gap on the oil. There might have been a little bit of a gap down there, but those little small gaps you're not going to worry about. It's the big gaps like we saw right on the S&P. So from what it looks like to me, it looks like those buyers have lost their grip. I'd like to get short into that second try here for the buyers, 1, 2, and run this thing lower right off resistance. Now, as you can see, I get a range on here. This range is very important because you'll notice, boy, oh boy, does it do a good job at anticipating where that key resistance level is at 40.82. Remember, we're a bear market right now. We're barely bearish. We are barely bearish here on this oil. I will definitely say the bulls, they still, like I said, they've got one more bullet left in the clip right now, and they better make it count, because if they can't, this becomes the second try for the buyers, right? And if this becomes second try, right, for the buyers, and they fail, good night. Usually that's what it means, right? Is usually we're going back down to those lows here. So low of day is the target, just like the weekend gap, right, is a target on the S&P. You can see, though, the S&P, you could almost kind of anticipate what the oil might be in store for here, just like the S&P did right here this afternoon. So relatively simple plan here on the oil. I'll tell you right now, the buyers are the ones with the hardest job right now. The sellers are a pretty easy job, in my opinion. Being a buyer right now, not so easy, because as you try to get long right now, you're buying into a lot of bearishness and a lot of overhead resistance up overhead here. So I'm going to focus on the sell side. I'll talk about the buy side, of course, right? But if we, think of it this way, if the market pulls back, I know exactly where I want to get short. If the market rolls lower, this is where things will get interesting, because what I'll do is I'll have to adjust my channel, right? That's going to be probably the most difficult part for my job tonight, is trying to kind of anticipate this ahead of time, because obviously if it collapsed back down, it may just shoot lower, right? Like gold did today. Probably not, right? But it may also kind of stagger lower as well. So I do want to be ready for that as well. And I also want to make sure I'm ready for if we do have a range going here. So, relatively typical plan here on the oil. I say typical because this is pretty much what we do every day in our trade room. Whenever we have a reversal with a 1, 2, 3 move like that, I simply mark up that low, I mark up that high, and now I know exactly where I want to get short off of those highs here. What I'd like to see is, I'd like to see us go up right into that, into that resistance area I mentioned overhead, get these buyers going. All right, we're back on track now, right? Get those buyers trying here. Get them to commit off the moving average, sell into stop losses, sell on the pullback, and honestly, this could get really good. We could easily see a buyer failure into a bear pullback, into a strength move for the bears, and then, of course, into a trap down here, right? So those are 4 setups I'm looking for here in the early part of tomorrow's trading session. Get up inside that sell zone, get up inside that resistance zone, get those buyers to take the bait, let them buy into those, right, into that resistance. We'll sell in the stops, then look for that pullback coming afterwards. Right now, oftentimes when a market goes reversal or failure to pullback, it will jump off the moving average. If it jumps off the moving average, 1, 2, 3, 4 to 6 consecutive red candles, strong green candle, that's your strength signal. Right, we call these strength patterns, right? And of course, again, I cover all of these patterns, again, inside that free trading course. You'll learn about failures, pullbacks, strength, and traps. And of course, right, the trap pattern will come thereafter, right? If the market really starts to collapse on us, what's our concern? We don't want to sell too low, do we? Right? We don't want to sell low, so what's the best way to avoid selling low? Trap patterns, right? So those are 4 setups I'm watching. Now, those 4 pattern setups can easily be kind of transposed a little bit lower here. So let's just say, for example, the market runs a good amount lower, right? You can probably kind of assume kind of where it may go, right? It may go something like this where, right, it makes a run lower here, then we pop up, right? So that is a very much a valid option here. Buyer failure off the high of that channel into bearish pullback, into strength, into trap, right? Again, same basic sequence, right? Buyer failure, seller pullback, right? Bear strength, bear trap, right? So failure into pullback, pullback into strength, strength takes us too low, and we sell above the highs, right? 4 pattern setups as we go. So kind of keep that in mind here. Now, you might be wondering too, what if this thing does turn into gold tomorrow, right? What if it does turn to gold? What I mean by that is gold, that big drop today, right? What if it does just drop, right? What if it just collapses as it goes here? If it collapses, you definitely want to keep an eye on that 2-try trap, right? As we run lower. Now remember, this will be, it'll collapse, right? As it collapses, look for that shallow pullback, that lower low in price, and look for that trap. Remember, the one thing you don't want to do is chase the move lower, right? What we'll do in that point is mark up that low, mark up that high. Remember, we're always trying to find, remember, if it really runs, if it really collapses down, if I see that shallow pullback and that lower low in price, 9 times out of 10, that tells you find a channel high, right? Find a steeper channel high, find that trap and hit it. Right, a 2-try trap pattern here as we go lower. And again, all of these short setups, they've got one thing on their mind, right? And that is to get back down to that retest of that low. So again, it may run a little bit steeper and then pull back on us, right? That's fine by me. Go lower, come back, failure into pullback, into strengthened trap, or it may just collapse going lower. And you're going to know it when you see it. It'll shallow pullback. It'll lower low in price. The giveaway is that shallow pullback, right? That shallow pullback is usually what gives it away. Followed by that lower low in price, mark that high. Again, find that new steeper channel. You know, sometimes the market really rips. And when it does, it's just unrealistic to expect this big pullback. Right? You're not going to get this big pullback if the market rips lower here after being such a big move up early in the session, right? Don't be unrealistic with it. Look for that shallower pullback if you get the right entry setup. And again, you can see there's some definite nuance to that, right? There's some discretion involved to this based on how strong that market goes lower. And we'll talk about this tomorrow morning, of course, every morning in the trade room, right? We'll do it together. That way you know which pattern to look for. And again, I'll put all the links you guys need to get registered. I'll put all the information for that inside the description of this YouTube video from the blog right now. I'll put some buttons below the video tonight on the trading blog. So grab those buttons as well. Now, there's also a chance here this market may go sideways. So if it goes sideways here, remember, it'll be very different. Let's talk about this for a second, because the range, where the range develops, is important. If we run lower and then we go into a range down here, there's no real doubt about direction, right? We'll look to sell above the high with a buyer failure pattern, right? If we go sideways inside of a range, we sell above the high. Remember those 2 breakout patterns, right? The 2-try trap pattern. We talked about this on the S&P, so I'm not going to go into too much detail on it, right? But 2-try trap pattern, 1, 2, 3 breakdown pattern, right? Again, this is all assuming we have a range here. So think about those three pattern setups. My favorite, again, is always a short above the high of that range, a buyer failure above that high, or do we get that 2-try breakout below the range, or that 1, 2, 3 breakout pattern? Again, looking for the failure or a breakout. So we do want to be aware of that possible range here. The one thing I would be curious about is if we start to see a range form somewhere around here. We're right on top of that round number. So I will say this: if the bears, if the buyers can hold off these bears right now, and if we can get that right, that range here, now what I'm going to do is I'm going to mark up that swing. Well, the bottom line is if the market ends up going sideways into a range, right, and we start to see this market stabilize above that 40, now I've got to think these buyers have their hooks in this thing. So I'm still going to look to sell above these highs, but now the problem is the damage has been kept under control for the bears, right? Remember, as I mentioned earlier, if the buyers try once more and fail, it's probably over, right, for these buyers. There's a tiny string, right, still holding, there's a thread holding these buyers up right now, because this could easily be, right, a 2-try failure. If they do go sideways here, that will confirm for us now, okay, the damage has been kept to a minimum. I want to sell above the high of a range. Remember, we always want to sell above the high. This time around, if we go higher here, it's going to feel a lot more bullish, right? It will. It'll feel a whole lot more bullish. That's okay. What's the best way to short above the high of a range if we're concerned about momentum? Nested pattern, right? 1 try for the bulls, 2 try for the bulls, look for traps, look for trend lines, and we'll sell back down from there. The range is probably the biggest variable as we go into tomorrow's trading session. If we do go sideways here above this 40 area, I basically now go into show me you mean it mode, right? Show me you mean it. Show me as you go higher up here. Show me just how badly you guys want this, the bulls that I mean, right? Because if they give it a couple tries up here, 1, 2, I can then sell it back down from there. Just be careful if this thing goes into a range and pops higher. I don't want to get too aggressive, right, selling short above that high, because again, we're barely holding on here for those bulls. I don't think that will happen tomorrow, but big round number, $40 a barrel. Again, if this market goes just a little bit lower though, right, this becomes a very different story, because it's a pretty easy job here for us, right, with that trading range. That is something we're looking forward to tomorrow, right, here on the oil. And then last but not least, how does this market turn bullish? I mentioned earlier that the buyers have a really hard time right now. Why? Because they're high right there. So if the buyers jump up, what are they going to do? Buy that pullback? No, definitely not with my account, right? That's not going to happen. You know what I mean? I'm not going to buy that pullback up there. Remember, anytime you see a strong move up like this, the goal is to get back to retest the high. There's no telling how far it'll keep going through that high. There's a good chance this market could run up, pull back, try to go, and come crashing right back down again. So for me to want to be a buyer on this, I think they've got to get this party going back to the upside again, right? We've got to see a strong move up. You got to show me you can hold this thing. Show me you hold it. Show me a strong jump off the moving average. Show me you really want this again, and I'll grab that high. I'll grab that low. Whatever. I'll gladly skip that first pullback. I don't think that's a very reliable buy spot at all. I think momentum is too bearish. I think we're too close to the high. There's not a very good risk-reward ratio up here. You're buying right into where most buyers will be taking their profit. Now, again, the gutsy buyers, right? The gutsy buyers are buying down here. But I think it's dangerous. I think it's very dangerous right now. If the buyers, if they were going to show up, they would have come in and they would have hit this thing, because this is exactly what a 2-try trap looks like, right? If the buyers wanted this, they would have hit that. And you'll notice they didn't, at least not yet. So we'll see how the market opens up here in about 5 or 6 minutes in Asia. Buyers really have to show us if they want me to trust them right now. Hopefully the market will open up, go a little bit lower here for us. We can adjust that channel down, and we can get short, right, quite easily off the high of that channel. All right, oil, we got you on our radar for tomorrow. How about some gold? Boy, oh boy. the old stairs up and the old parachute down, I see, right? That's kind of what happened here on gold today. Don't let the chart fool you. This was pretty much 4 hours down today. The low, if I go back here, you get your pre-Halloween, right, kind of lows there. What is that? How many days is that? How many days did it take to go higher here? If I measure that up here, right, it took what? What is that, 10 days? So, 10 days to go higher here, right? 10 days to go higher and about 4 hours to go lower. So, I believe the word will be quite the capitulation, right, on this gold, if I can use a tongue twister. Now, what's the key takeaway here on the gold? Well, obviously, with a vaccine headline, we assume gold goes lower because it's good for gold is a shelter market. So bad news is good news for gold. Good news for the world, good news for humanity. A COVID vaccine seems to be pretty bad for gold, right? Unless there seems to be some other, right? Unless, of course, it's bad for the dollar, right? Which would be good for gold. There's some variables there that goes into it. The bottom line is it's easy to understand why gold, right, took a bath here today. The key takeaway is it was pretty much a straight move down, right? Pretty much straight move down. You can see I broke it up into two legs here, right? There's two legs going lower here. But, I mean, there was very little pullbacks. Like I said, this whole move, it took like 4 hours, right? This whole move took like 4 hours here. 5 hours, right? Took 5 hours to get down to that low here. So, it was basically a straight line down. Whenever I see a straight move like this, we know we're bearish, but it's a spike. That's how most traders would classify this. It's a bear spike. And a spike tells me to be ready for 4 different possible scenarios, right, for tomorrow. You ready? I'm going to go through these relatively quickly here because we're running late on the video right now. First one is a spike in range, right? Spike in range, sell above the high of the range. Second one is going to be a spike in channel, sell above the high of that channel, right? These are the two most common, by the way, right? Spike in range and spike in channel. Okay, both of them require a pullback. Okay, those are the first two. The second two are going to be a spike, right? A spike into a flag. These are usually the more complicated ones. These you want to try to sell underneath the flag, right? These are complicated for many reasons. One, it looks like a bull channel, right? But it's actually still a bear market. The giveaway in a flag pattern is a very slow pullback. The pullback is very slow. We'll talk about that in a second. And then let's not forget, there is potential for a reversal, right? Strong move down, we pull back, right? 1, 2, 3, and reversal. So I can't count that out either. So now we've got kind of the plan here, right? We know we don't really know what to expect tomorrow, but we know we're bearish. And unless we see that big 1, 2, 3 reversal pattern, I definitely want to be looking for the short side. Now, the ultimate goal of this, let's just cut to the chase. The ultimate goal of this is I want to sell at resistance. So I've marked up some of those lows. I've marked up that high. I've got some areas overhead. I really like this spot right here. This kind of 1900 high into that hidden channel high. I really like that spot right there. I'm not sure though if I'll be able to find an easy entry in that area. So let's talk about a couple scenarios here, right? First of all, the most common. Anytime we see a strong move down like this in one day, the following day is almost always going to be a range, right? Remember, there's 3 basic patterns when it comes to a range. The first one, and the one you always want to kind of look out for, is that failure pattern. We're bearish. I want to sell at resistance levels above the range. I want to combine those resistance levels with a buyer failure. Wait for that pop up, wait for buyers to try to get long, and simply sell right into those stop losses, right? So that is, again, that's usually going to be the one that's most common for tomorrow. Now remember, there's also potential for some breakout patterns. So this could easily, right, it could easily go sideways here and then break out. So what are 2 breakout patterns? One of them is that 1, 2, 3 breakdown. Mark that low, mark that high, sell off that high. Now, why not just sell the breakdown, right? Why not sell that breakdown? Because remember, we've already gone so darn far today. I'll tell you, there has to be some further, there needs to be some more news. There's going to be a natural disaster. There has to be a terrorist. There has to be something that changes the opinion of this market, right? Because after such a big move down today, if we don't get any new information, right? If there's no new information that comes in the overnight, right? What's to say that sellers are going to go, oh yeah, let's keep on selling. Can't wait to sell it down here. Probably not. Right? Sellers will typically reject the idea of selling these lower prices unless we get more information, right? And that could easily happen. In that case, we could sell that breakdown, but most of the time, though, you're better off with that 1, 2, 3 breakout, find that new channel, and sell the high of that channel. And of course, right, the third breakout pattern, or second breakout pattern, third pattern for a range is a 2-try breakout pattern with that trap right above that high. All right, so those are some key components, right, as we go lower. Now, the hardest part about this is going to be the next big milestone is only down at 1815.5. So as we go lower, a 2-try trap seems very appropriate as we go lower here because, after all, trap patterns, right, are my go-to pattern here to avoid what? To avoid selling too low. So keep an eye out for that trading range. Another pattern I'm watching for is what we call a spike in channel. These are very common as well. Let's say we don't get the range and we don't get much of a pullback and the market rolls lower. If the market keeps on rolling lower now, I'm going to mark up that low, mark up that high, and the plan doesn't change very much here with any other bear market. I want to get up around key areas of resistance. I want to see buyers come in, try to foolishly buy that pullback, look for buyer failures into seller pullbacks, into strength, into traps, right? As we go down, again, that 15.5, right? Or the next level below that, right? Which is way down here. Plenty of space there if we can get below that 15.5. Not likely tomorrow, but hey, possible if something changes. So second option here is that spike and channel. Mark that low, mark that high, wait for the pop, right? Get up off these lows again, sell high with a buyer failure into a pullback combination as we go. That's a great setup for tomorrow as well. The hardest one is the one you can almost kind of see it setting up right now, right? It's a lazy bull channel. Now the key here is it's not a reversal because it's not going to turn. It's not going to run, right? It's not going to go 1, 2, jump. Right? Remember, if we jump off the moving average, right? That's the fourth scenario. If we jump up, if the buyers hold and we jump off the moving, remember, it doesn't matter how strong the first leg higher is. What matters is can they jump off the moving average? So they can do that. If they can go 1, 2, 3 reversal, the buyers are trying to go back to retest the highs. We find our high, we find our low, and we buy the low of that new, in this case, right, new hidden bull channel. Right? What is more likely, though, in these situations is you get this, right? You get this very lazy, again, the key word is lazy, right? Very lazy bull channel. It's not jumping off the moving average, right? We're not getting this big short covering rally. And now what we're going to do is get underneath it, right? And use it as a level of resistance. Now, sometimes what happens is on these flag patterns is they don't give you that ideal pullback using the underbelly of that channel. Sometimes what happens is they end up going lower and you have to end up getting into the trap, right, off of that high. So if the market makes a run going lower, and you'll know it, right? It'll take off the downside. Again, the ideal is I want to get up and over, right, to use that underbelly. If we don't get it, though, I want to find that trap entry because, after all, the bears want to get back down to retest that low. I don't want to sell it very low. Best pattern to avoid selling low, right, is a bull trap, right, in this bear market. All right, guys? So I think now we get a pretty good plan of attack now, right? Expect a range. Ranges are the most common after a big day like this. Get up, buyer failure, poke it back down again. Right? Or does a market roll over, right, and play lower, mark up that low, right, get that pop up, same idea. Keep selling into bear, right, keep selling into bull failures as we go lower. The hardest part, again, are these flag patterns. Don't be so quick to call this a reversal. It's got to jump, right? If it doesn't jump, get underneath it, use it, and get short off the underbelly. If it does jump, 1, 2, 3, reversal, right? And again, this will take some discipline. Don't have to pick this bottom right now. Mark the high, mark the low. Remember, first test is always the best test off the low of that channel. All right, guys. Boy, this video got a little bit longer than I wanted it to be, but I want to make sure I covered all the details for tomorrow, because tomorrow, it's a pretty big day for us in the trade room tomorrow. We got Wednesday is a holiday, right? Wednesday is a holiday. So tomorrow, there is a definite sense of urgency tomorrow morning in the trade room, and of course, really all day tomorrow in the financial markets. Don't forget, we open tomorrow morning, 8 o'clock Eastern time in our trade room. I would love to have you there, elbow to elbow, doing it right there with me. It's so much easier to learn and do this the right way by looking over my shoulder every morning in our trade room. I'll put all the membership information you guys need, the description of the YouTube video. I'll also put a big button for you guys below this video tonight on the trading blog. If you're on the blog at Sideways Markets right now, grab that button below this video tonight on the blog. And don't forget to call the office if you have any questions, right? Don't let my ugly mug scare you away, right? Call the office. I'm always here to answer all your questions. I can easily help you get registered over the phone, get you registered for tomorrow morning's trade room, and make sure everything is all buttoned up so you're ready for tomorrow morning at the opening bell. Live chat is also a good option if you guys have any questions. And don't forget, make sure you subscribe to our channel. Hit that thumbs up button. I hope by now I've earned a thumbs up on this video at least, and hopefully a subscribe, because we'll do another one tomorrow night, and I don't want you guys to miss every evening's nightly newsletter. Again, holiday on Wednesday, big day coming tomorrow. Will we hear more about this vaccine? Will we hear more about the never-ending election? We shall find out more tomorrow morning. Bottom line is, the plan is ready. Trade your plan tomorrow, right? We'll see you guys tomorrow morning in the trade room. If not, come back and see us again next time in the next edition of our nightly newsletter. My name is Joseph, by the way, and have a great day out there. Bye for now, guys.